It's showtime. Okay, it's showtime. It's another beautiful Thursday here in Miami. Thank you, everyone who has joined us today. Thanks for joining on Coffee Time. For those of you who are returning to see us today, welcome back. And for those of you who are new, please give us a thumbs up or a hands up there in the chat so that we know you are new and we welcome you as well. I want to encourage every one of you to go ahead and subscribe to the channel or the page that you are watching us from. We are live on Facebook, LinkedIn, and YouTube every Thursday at 10 a.m. Eastern Time. So please go ahead, click right now so you don't forget. And every time we go live, you will know when we have scheduled it and we are live. Quick introduction. My name is Marie Torossian. I'm a certified public accountant and a chartered global management accountant, an experienced auditor and a CFO. Currently, as a CPA advisor and a transformation coach, I use my proprietary methodology, Valuation MT, to help business owners that have reached their first million to get to their 10 million and more. I'm also an author. I've written a couple of books, The Complete Guide to Business Growth, which is available on Kindle, and you can purchase it. And I have the link in the chat soon. And also the Business Owner's Guide to Operational Accounting, and that's the free ebook that I'm offering to you, and I'll put that link in there as well. As always, I am joined by my most featured guest and my tax colleague, Pedro Gonzalez, CPA. Pedro, welcome to the show this Thursday morning.
Good morning. Yes, it's a pleasure to be here. Tax season's officially started. The gates are opened, so we're all excited for this time. And so we're here not only to help you with your taxes and planning and so on. We're here to also share some good information that is going to help you with this tax season. So Pedro Gonzalez, CPA, your business and tax strategist. We help you with the three. I consider the three key areas of a entrepreneur, which is your cash flow. Cash flow is the lifeblood of any business. Doesn't matter the size, the industry. Cash flow is king. We help with taxation and minimizing taxation. And taxation, as we know, erodes wealth. Again, regardless if you are, it doesn't matter the size of your estate, it will erode if you're not doing something about it. And the exit strategy, we're all gonna exit. So it just depends on how we're going to exit. So we help in the preparation to the exit. The M&A market, the mergers and acquisition market, has been quite active, and it's not limited to the larger corporation. When we think of M&A, you know what I mean? We think of this SEC corporation, even smaller companies. We just met with somebody, their business got absorbed by a larger company. And it went well. You know what I mean? Because of the preparation that the kind of the pre-acquisition planning. And so that you got to keep that in mind. Your business, regardless of the size, can become a potential acquisition for somebody else, or you might be looking into acquiring somebody else. So with that said, I'll pass it back to you.
Thank you, Pedro. Yes, and we've talked about these issues before, and then so I invite you all to go ahead and check out some of the past episodes where we talked about employment related taxes. We've talked about tax planning in detail. We made a series about that. We've talked about partnership agreements, buy-sell agreements, reasonable compensation for shareholders or partners, and actually just recently last week we talked about real estate investments and related taxation, depreciation, cost segregation. And of course, we've talked quite a lot about M&A and how to plan for that so that you're not falling apart in case of an emergency exit instead of a planned exit. So with that, today's conversation is going to be all about the upcoming tax season. So
yeah.
There's even it's already a lot of deadlines happening. Today you already have to issue 1099s, right? All business owners should pay attention to this. Today is the last day to e-file, because there's going to be a time until it's accepted by the IRS and all that stuff. So make sure you to pay attention to that. But then I'll also open it up to Pedro, because I want Pedro to take us through some of the other reasons why, for example, certain individuals should be waiting and filing an extension and not file so early. So please give us a little bit more idea as to who should wait, who should file right away, and what are the reasons behind why these things, like what these strategies that you are
Yeah.
recommending.
No, that's it comes up quite often, and some people, I think, that are misinformed
Mm-hmm.
about deadlines, and so that's why I thought it would be a good opportunity. January 24th, Monday, the IRS has started accepting e-filing. So in essence,
Mm-hmm.
officially the tax season is open. So
Yep.
I figured this is a good time to kind of bring this information to the audience.
Absolutely.
One thing to remind again, I know you have done to Marie is January 31st. Make sure your 1099s. I would suggest tomorrow, Friday, to be kind of really your deadline to make sure
Yeah.
that you get it on time.
Yep.
Transmitted W-2s are also due. So
Mm-hmm.
make sure that that is done on time. Uh, Now, going into the tax season, you know what I mean, and how, what I wanted to kind of focus, and we're going to go kind of at a macro, kind of higher level, but still it's going to be beneficial to you, is how to take advantage of the tax filing. You know what I mean, the tax return, and why in some cases it's better to file extensions versus filing
Mm-hmm.
early. In essence, and the rule is, at least for us, when we look at it, is if the IRS owes you money, you ought to file early, file as soon as possible.
Mm-hmm.
And if you owe money, then you ought to pay your taxes by the deadline, which is the drop, the deadline, the ultimate deadline is actually April 15th. So you have until April 15th to, in essence, pay your taxes that are owed, and then file an extension. So again,
Mm-hmm.
if and again, these are general rules. There's like everything, there's exceptions to these rules. But as a general rule, if the IRS owes you money, then file as soon as possible so you can get those monies back to you, because you don't gain a benefit to give this money and leave it in the bank and the government. Oh, and if you owe money, then pay the taxes that are due by April 15th at the latest. Get it done, and then file an extension. Is an automatic extension. You will
Okay.
not be late. So file an extension. You have, and then in cases of individuals, you have until uh, October 15th then to file your return. Now, these are two separate matters. One is when the taxes are due, when the return is.
Right. Right.
So why let's talk about the why would I file early. The reason that you might want to file early, one, like I said, if IRS owes me money,
Mm-hmm.
what I mean, let's say you have a simple return, W-2, you have your dependents, not a whole lot of items, but you get some credits that then brings a refund for you. I would suggest go ahead and, there's no reason for you to continue postponing this filing.
Right.
Go ahead and get it done. The other reason sometimes I came across, and you might have come across this when people are going to get a mortgage, for example.
Mm-hmm.
But let's say, for example, right now you're in the midst of a mortgage, either refinancing, you're buying a house, and so they're going to ask you for. They might even start asking you right now for the 2021 tax return. So even though it's just so early, but they might ask you for it prior to April 15th. So in that case, you may want to go ahead and get it done early. But even in those cases, we have seen situations when you can present is in essence a return that has not been filed. You sign it. I mean, you inform the mortgage broker. In some cases, they will accept it. That
Right.
they
Like a
understand
draft.
that this, it gives them an idea of what's going to look like,
Right.
but it has not been filed yet. And
Understood.
so that could be an alternative for you if you're in that situation. Uh, you might want to consider, or at least discuss it with your mortgage broker to see if they can accept is in essence, my return and non-filed return. You know what I mean? So then they can use it, but they cannot really. It's not final.
Right. Like a
Uh,
draft version of it.
exactly. Now
Yeah.
the reason that why you should consider extensions, and that's especially for entrepreneurs, which is the bulk of our work. We work a lot with investors
Mm-hmm.
and entrepreneurs, is because of complexities. It will give you more time to to properly capture deductions that may be missed if we rush through it. And one of the advantages you still have is, even as of right now, one of the best things that you can do right now as an entrepreneur, as an investor, is to invest in your accounting. And because right now you still have time to go
Absolutely.
back to 2021. And let's say, for example, right now you already finished your calendar year, you close the books, and you're looking, listen, you have a profit.
Right.
And let's say a substantial profit. Well, right now, there's not a whole lot you can do to going back, with the exception of going carefully through your accounting or doing some kind of deferrals through retirement.
Right.
So that's basically what's going to be limited. So
Right.
my suggestion is to look into your accounting and sit down with your accountant, and then to carefully look through those the bank account and see what could have been missed, for you to also go through your records. That's why I use a checklist. You use a checklist for
Right.
our clients, and
Yes.
that is why the damn checklist. I know sometimes I look at that and it's like, what the
Whoa.
exactly, but really it's for your own sake. Yes,
Right.
it helps us. It minimizes the time between you and I going back and forth and asking you
Correct.
questions. And then, hey, do you remember this? Or after it's filed, you go, oh crap, I forgot. You know what I mean? And you don't want that. You know what I mean? So that's why we use checklists. We give you that checklist. It's a good memory check. You know what I mean? Like, go through. You know what I mean? It pays off. It only takes us about 15 minutes. Just sit down, go through it, because it might trigger something in your mind. Oh yes.
Oh, I forgot about this kind of thing. Yeah. Exactly.
And so that's the best investment you can make right now, is to go through your documents, your 1099s, 1098. Make sure you have them all. Make sure that if you have rentals, that all of your expenses are accounted for. Sometimes your accountant is aware of what is going through the books of the corporation. What it could be missing is expenses that I paid personally, which I have seen it many times. You know what I mean? I went and bought some lumber, and I needed a emergency. I went and bought it myself. I put it through my own personal credit card. We fixed whatever we needed to be fixed, but it was never reimbursed. It was never accounted for the company. So looking through those, don't overlook your expenses, especially if you're in a profit situation and you need to lower that taxable income. So why the extension then? Again, is because it gives you the opportunity to be able then to properly account, to give you more time to properly present those tax returns. You're not going to be late. I mean, you in essence, the IRS is granting you this automatic extension. All you have to do is to inform the IRS, listen, I know you told me the deadline is April 15th. You're giving me 6 more months. I'm going to take that 6 months.
Yeah.
That's it. You file an extension form. Make sure that your taxes are paid. Because I know that you hear people saying about the quarterlies. Yes, it's also important. But I can assure you that the penalty for underpayment of your quarterlies is less than the late filing of the taxes, April 15th.
Correct.
So let's say you missed some of your quarterlies, or the amounts were a little bit different. Make sure that by April 15th you're caught up. You know what I mean? That you're
right.
Calculation, and let's say your quarterlies were under, and so now is the time to sit down and say, listen, I made more money than I expected. My suggestion is not to be. Might be better to go with the conservative number. You know what I mean? And then go with that number and pay your taxes. Go back and drill into those tax returns, because I've seen situations where the person is, oh, but I don't, my profit is, let's say 100,000, but I don't think it's going to be 50,000. Well, you're taking a huge gamble there.
Yeah, that's a big gap there.
Exactly. I know. I understand. You don't want to go April 15th and pay, let's say $10,000. You don't want to do that. I understand, but you're running a huge risk that if it comes up to be 75,000, it's not 100, it's not 50, it's, let's say 75, you're short, and now you owe 5,000 plus penalties and interest because of the underpayment, late filing. And you say that now you compile that quote unquote saving that you're trying, it went away.
Yeah.
So that's one of the reasons why we encourage, especially for the entrepreneurs, to consider the extension. You're not going to be late. It gives proper time for your accountant, for your tax preparers to properly go through it. Uh, the other reason is because, for example, you can still do matching even after
Mm-hmm.
uh, the end of the year. Like right now, you could make your corporation could make a contribution to your retirement and be deductible in 2021. So if you
Right.
filed, or let's say you filed as March 15th as a corporation, your S corp, and you filed it, but then when you could have made a contribution. Now it's possible that March 15th I don't have the money, Pedro. You know, but by September, you still have until September to make that deposit, that contribution for 2021. So you
Wow,
don't
that's
have
a
to
big
have a month.
extension.
I'm sorry.
That's a big extension. That's a big
Exactly.
timeline to make sure that
Exactly.
you're
So
still
you
paying
know
for the
exactly.
cash
So
effect is not coming in right away. You have a lot of time. Yeah.
so let's say that, hey, we want to lower your taxes. You could make an X amount of dollars of contributions. Yes, you don't have the money today, but knowing that, I could probably set aside every month or so often those dollars, put it into the retirement. I still have until September to, in essence, to truly file my return, and then I will make sure that those dollars are filed. I'm sorry, are deposited. Then I file. Uh, for real estate
Yes.
investor, cost segregation, you still have until the filing date. You know what I mean? In case of with extension, meaning that you have until September 15th for corporations, and you have until October 15th for individuals. So that's a strategy we use for a lot of real estate investors, is cost segregation, to help them lower the taxes, accelerate some of the depreciation. So no reason to now force a situation where, let's say you acquire some new property, let's say the other one's already taken care of, but I need to accelerate depreciation. You have until October or September, depending on the type of entity. You can file an extension,
Right.
get it done properly instead of rushing through, and get make sure that the numbers are the cost segregation is done, that the numbers are being double and triple checked, that the documentation is in place, and then file. And I
Yeah.
can mention that like in cases of like a SEP 401ks, you can make contributions.
Mm-hmm.
So take the time, make sure that it's properly filed, and so that's the main reason of why consider. And I wanted to bring that up in this podcast, is because I know that it causes confusion. I mean, there's two different deadlines in here we're talking about, and
Right.
some people get confused and thinking that they have to file April 15th. You know what I mean? And so you have to pay your taxes by April 15th. This is what
Sure.
it is.
But you can extend the filing of the return.
Correct.
Yeah, absolutely.
Yeah.
So to kind of clarify, in case any one of our audiences is actually thinking through this, is that if someone has, let's say, a rollover IRA or some kind of another 401k from a previous, employer, and now they have their own business and they intend to put money there, can they still pay from their business directly to that IRA, or should they be opening up a separate retirement account to
I'm
make
so
sure they.
I'm
Yeah,
sorry.
go ahead.
Can you repeat that
Yes.
question again?
So let's say, as it says, let's say someone has a rollover 401k or an IRA from a prior employer, but now they are a new entrepreneur. They just started their business and they want to start putting, paying towards their retirement contributions from their business. Can they put that money towards their rollover accounts, or they need to open new accounts?
No, that's a very good question. And the answer is going to be it depends.
Mm,
Uh, it could work in either way. Just
mm,
my suggestion in those cases when you're having a rollover is to truly look at your personal circumstances, and having a good financial advisor to make sure that it is done properly. I've seen it working either way. You know what I mean?
understood.
But
Understood.
I cannot tell you that one is better than the other. It's just gonna depend on your personal circumstances and what the goals are with that retirement.
Right. So from a tax standpoint, it wouldn't really matter as long as you're
Yeah.
putting aside for understood.
Correct.
Understood.
That's why
Because that
yeah,
creates
exactly.
such a confusion. How many retirement accounts should I have? That's
No, you can have multiple. That's the
Yeah.
thing.
So
You could have it technically. Yeah, you can have multiple retirement account, like you said. You came from the private sector. You have a 401k. Now you're gonna become a self-employed. You
right.
could roll that into a separate account and separate retirement. You could
Yes.
open your own now, let's say, for example, a SEP account
Correct.
under for your self-employment. Separate from that other one and keep it all separate. You could still contribute to, there's people that have SEP. They can have a cash plan. They can have they can have multiple. In some cases, now all of it has to be done carefully, has to be done with proper advice, so there's no conflict, that
Yes.
you're not, so it works. But yes, you can have multiple retirement accounts. We recommend to look into HSAs. I'm not
Hmm.
going to expand on this. It's a conversation for
Right.
another
Right.
day.
Right. That's a separate conversation. Yeah.
Correct. But I see a lot of times that it can also be used as another way to shelter, to defer some monies.
Yeah. And we did cover some of these, not in depth so much, but we did cover some of these during our tax planning
Correct.
series that we spoke about. So for those of you who have some of these questions on your mind, make sure to go back to some of the sessions. You can see from the descriptions of the videos in the past, what we've talked about. And there was about 4 or 5 weeks that we talked about tax planning and different sections of it. So make sure to check those. We spoke a little bit more details there.
Now, I do have a question for you. Now,
Okay, you have a question for me. Yay.
yeah,
You
and
should answer
especially
and
now
ask
that
the question.
I know, but I do, because now what I would like is at least for you to also share more from the accounting. You know what I mean? Because I can also talk about it, but I figure you also share your experiences of how is it that how critical it is. Because again, I know we have talked about it in pieces, but
Yes.
especially right now, this is an opportunity that, especially focusing on entrepreneurs. I mean, people that have a business, how important it is, and what the difference between, let's say an accountant one and an accountant two, the different approaches some of these accountants are going to take. I have some things I want to share too, but I wanted to hear your point of view.
Yeah, yeah. So I think the difference that happens, and most people don't realize, is that the way we work, and you and I are very similar that way. We really go in depth, right? Like we're looking at every single general ledger account. We're looking at the profit and loss. We're looking at every single expense. We are, because we also have been auditors. We're also bringing a lot of, let's say, that audit background. Are the records correct? Does this make sense? Year over year, we're analyzing a lot more than just looking at, oh, okay, so the bank is reconciled, the credit card is reconciled. Okay, we're good to go. So that's only a portion, a little tiny portion of what one accountant may do. And in some cases, when certain people work with a tax filer, for example, the tax
Mhm.
filer is not looking at these type of analysis. They're just taking the numbers and just putting into the system and going at it.
Right.
We actually pull the data. We look at year over year. Now we start questioning a little bit, what happened here, what happened there. If we see a lot of equipment purchase, is this a possible of a depreciation, acceleration, that kind of conversations that we'll have to make sure we're recording things properly. And if they are not recording depreciation, we'll record it for them, right? We are going above and beyond of the usual, just looking at basic, hey, is this reconciled or not? In a lot of cases, actually, most business owners and entrepreneurs, they just wait. They're so busy doing so many things, they are not even doing the basic reconciliation.
Mhm.
Recently, I actually spoke with a client where I was like, hey, are you doing your own 1099s, or do you want us to handle it? And after back and forth, like, well, I'm not going to issue 1099s if your books are not ready. So I need to verify all these numbers, and if you say you've paid a vendor X amount, I'm going to go in and verify. That's a key word, verify. I'm not taking your word for it. And that's a big difference, I think. A big differentiator for us, the way we work, is we're verifying every single thing that our clients say before we submit it.
Yeah.
And the key point I wanted to say was that when I'm walking, I said, before I say anything, let me check to see if you have actually finished, because you're claiming you have actually everything done correctly. And the first thing I go is to look at if the basic reconciliations are done, and they're not,
Yeah.
and there's new accounts added, and you know, I'm like, well, your books are not ready. How are you going to know what you've actually done?
Correct.
So it's this is basic stuff, but people, most entrepreneurs are not in tune to what they need to be doing, and then they rush through, like you said, and they file numbers, or they want to do the taxes, and we're still trying to verify all this information, and they don't really realize why we're taking so much time. It's not taking time, we're just trying to get the work done properly.
Correct. Yeah. No, and that is a good point. And the reason I wanted to also bring this up now, because again, what I mentioned about the filing of the extension, and one of the investments that all entrepreneurs should be doing, especially the more complex your business, the more you should consider
Yes.
this, is to invest in the accounting, because the two are interconnected. Your tax preparer, like you said, if you all you have is a tax preparer, he or she is going to take the numbers. You
Yeah.
cannot expect them to do more than that. You know what I mean? And they're gonna take the numbers. You give them a balance sheet and a P&L, and they're gonna put those numbers into a software. It's gonna generate a tax return, and here you go.
Yeah.
Now, if those numbers are incorrect, incomplete,
Yeah.
uh, then that's what's gonna get reported. That's why I was saying the oops. Yeah, because
Mhm.
I seen it happening.
Yeah.
You know what I mean? Where somebody has already filed, and then they go, oh crap. You know what I mean? I forgot
Yep.
this. It's not complete. It's inaccurate financial statements. So that's
Absolutely.
gonna be costly. And this is why I keep talking and harping on people that you get what you pay for. You know what I mean?
Absolutely.
I know that if you go to accountant one and he or she charges X, and you go to accountant two and he or
Mhm.
she charges X plus one, then you might say, well, the other one looks more expensive. But if all you're looking as the price or the fee, then I think you're doing this incorrectly. You got to look
Yes.
what exactly you're gaining. And I can assure you that most of these professionals that charge a little extra, most likely they do have an added value that you're not going to get by going through the express line. You're going to be missing
Oh, that's a
something.
good one. An express line. I love
Yeah.
that. I love that.
Yeah.
As you
So
were
again,
talking,
I'm not here to belittle or I mean, there's good accountants. I mean, there's good
sure,
bookkeepers. So,
but they're
but
just doing the specific work you're paying for. That's it.
exactly, and that's it.
Yeah.
And if you hire a bookkeeper, and let's say you're paying that bookkeeper to reconcile your books, he or she is reconciling your
Yes.
books. You know what I mean? You pay me is to take the numbers from your bank statements and put them into QuickBooks. I'm
Right.
done. You know what I
Done.
mean? It reconciles. Here you
Exactly.
go. Now,
Exactly.
if you want that same bookkeeper, I can assure you, if you tell that bookkeeper, listen, I need you to go a little deeper. I need you to make sure that that my classifications are going to be in the proper buckets. I
Hmm.
can assure you that the fees are going to go up. You know what I
Yes.
mean? So
Yes.
actually, the fee that the other individual was proposing to you, actually, it's not that expensive. It's that was already a condition of the services.
Exactly.
You know what I mean? Is that
Exactly.
the other individual was not simply limiting him or herself to just simply plugging numbers. The
Yeah.
same, when talk about tax preparation versus tax planning, we our fees are going to be higher. I tell people, what I mean, but it's because of the value we bring in. We're not here to prepare returns. We're here to do strategies and planning. Now,
Right.
as an add-on, yes, we prepare your return,
Yes.
but that's not the focus. The focus in here is to help you minimize your taxes. And for that, that's what you want to minimize your taxes. You need to go to a tax strategy. You got to sit down with your accountant or your tax preparer, and are you analyzing my taxes to make sure that I'm lowering my taxes? And if the answer is no, then you need to consider asking them, listen, how much more would it take to
Right.
to invest time, so I can assure that you're assuring me that I'm getting the best deal I can get. Then you can compare, in essence, apple to apple. Otherwise, you're not comparing the same thing. You're comparing somebody that is simply doing tax prep. And I get this all the time. Oh, this is too expensive. Expensive in what way? You know what I mean?
Right.
Because we're
Right.
not comparing. So I wanted to bring this up because, again, the importance also of the accounting. You know what I mean? More than just simply, like you said, the reconciliation. Some people don't even
Exactly.
understand what reconciliation means. It's not just to put all the numbers. Well, I went through all the transactions and they're in. That's
Yeah,
not reconciliation.
absolutely. Yeah, and an example I wanted to give is that, for example, when we are doing our bookkeeping, even if it's the basic bookkeeping, a lot of times we do look at, let's say, numbers that don't make sense. For example, if a suddenly I see in the clients, usual, expenses, let's say repairs and maintenance are going up like, I don't know, thousands and thousands. I'm like, what is going on? This doesn't
Yeah,
seem appropriate to the type of business that he does, right? Why is repairs maintenance going up, or equipment purchase is becoming really massive? Like what? So I would question what are these transactions? What are you actually doing? Is this really for the business? So what we're trying to do is actually protecting our clients from doing mistakes that could really cost them a lot more if they were to just go ahead and take that. If they were doing it themselves, or someone not paying attention to that kind of problems, and they take that P&L and L and they go and file their taxes, and of course the IRS is going to be like, repairs and maintenance, $30,000 on a small little business. What did you spend on? The type of
well,
business doesn't make sense. That's the type of stuff they're thinking. So that is what we think. We use our auditor mindset to
well,
kind of go through some of these things and question ahead of time, so we can save our clients a massive problem down the road.
mhm,
So we are always looking out for our clients, and we want to make sure that they're always in compliance. So that's how
yeah,
we always are different and differentiate ourselves. And there's many accountants this way, that they work a little different, and so it's good to have that knowledge. So yeah, well, I enjoyed our conversation. Any last thoughts, Pedro?
no, no, no. Again, just tax season is ready. It's open. Make sure that you have
Open
again,
season.
exactly, open season. So, and if you don't have a tax checklist, I know Marie has a link that she
Yes.
can share. That I have my own. But like and subscribe. I mean, if you're enjoying this type of material, like and subscribe. I mean, this is something, again, even during the tax season, we're taking time to share this. What we consider to be valuable information. I think that you will gain a lot by sharing and also joining us in this type of conversation. But yeah, again, tax season is open. If you don't have a checklist, get one. I'm telling you, it
Yeah.
pays off. If I know that Marie has a link. If you want to go
Yes.
to your accountant and ask him for a checklist, make sure that you're going through because you want to make sure that you're deducting everything that is possible. You should be, pressing your preparers to, is there anything else out there that I could be doing to lower my taxes?
Yeah, and I'm gonna actually put the link to the my blogs and resources, and then there's a lot that there are two checklists there.
Wonderful.
So that way our audience can actually go and download. There's one for if you're just an individual, you have no business, so it's just an individual checklist for your tax returns, and then one for business owners. So
Awesome. Yeah.
so that way you have
There
both.
you go.
If you do have a business, then you have to download both. So
Correct.
and go through that list, and the checklist is going to be super valuable for you. And with that, we'll say, have a wonderful rest of your day, and we'll see you next Thursday. Our schedule is back on the usual Thursday at 10 o'clock Eastern, Miami time. And with that, I
Really.
also want to leave everybody with, we want to make sure that you have your top 5 people that are always supporting you and are with you, and we also hope that we are the 2 of the 5 people that you are surrounding yourself with. And with that, have a wonderful rest of your day.
Awesome. Take care.
Bye.